So how did you get into stock trading? How old were you?
Yeah, so I was like 14, 15, so late 2016, early 2017. It was my cousin who introduced me to Bitcoin. Started trading crypto, did pretty well with that, and then fast forward to 2018, transition into the stock market. And as most people realize, like the amount of capital you have, you know, even if you have 10, 15,000 bucks trading just shares of a stock, you're not going to really see worthwhile or substantial gains. So I'm like, you know, options are risky. Inherently, if you know about options, you're essentially leveraging your money 100 to 1. One option contract gives you the right to buy 100 shares of a stock. So, you know, I blew up a couple accounts, $10,000 account out the window trading options. And then I found an edge, and I think every trader needs to realize that you have to find an edge to find consistent profitability in the market. And it took me about a year to find this edge. And so, you know, now we're in 2023. The last, years have flown by, and I've been consistently profitable since then.
So when you say edge, what exactly is that?
Yeah, so I created a software. Now, this is an order flow software. So what I do, I take all of the order flow data from different data providers throughout the market. So this is all retail order flow data. I take that data, we buy that data, license it, and then I have this software that I created with the help of a couple other guys, so I can't take all the credit. And so that software is paired with the technical analysis I do. So as a trader, like my style or strategy, to kind of put it into the simplest terms, if you guys don't know much about trading, I'm a trend trader. I trade based off of a series of moving averages. I look at setups within those moving averages, trying to identify different patterns on different tickers, and then I'll pair that with this order flow software that I created.
Wow.
Yeah. So I'm a swing trader.
Right.
I started out day trading, and it's funny enough, the company's name is the Daily Traders. Started out day trading, transitioned into swing. Main reason being the time that it takes to swing trade. I spend about an hour and a half to 2 hours trading every day.
That's it?
And that's it. And that's what most people think. It's like you don't need to sit on your screen all day and just burn your eyes out and stress. And I figured, starting this company and having a lot of, other things I wanted to do and focus on outside of just trading, if I could find a way to trade to kind of minimize the time I had to spend on my screen, which was swing trading, and then really finding that I guess, style within swing using the software I have.
Nice. So what is your win rate in swing trading?
So when it comes to win rate, and I want to talk about this because it is interesting, and so when I say what my win rate is, I'm looking at a year to a year and a half worth of trade data. And so it changes as market conditions shift. My win rate and any trader's win rate is gonna change. So last year, I closed the year with a 75% win rate.
Damn.
Which is pretty good. And I think most people assume that, you need a 80, 90% win rate to make money. You can be consistently profitable with less than a 50% win rate.
Really?
It all comes down to risk management, risk to reward. Sure, if you have a 50% win rate, you're kind of limited to taking one-to-ones. So the higher the win rate you have, you can kind of push that risk to reward per trade you're taking.
Right.
And so, working with that year and a half worth of trade data gives me the most accurate win rate as market conditions change and shift.
Right. Yeah, because you're taking the balance of everything.
Yeah, so I'm taking, and as I add on trades this year, I'm kind of removing trades off the back over the last year and a half. It gives me the most accurate kind of numbers that I can go off of when it comes to managing risk.
Have you ever taken a huge L where you couldn't sleep at night? Like it was just a massive L?
Yeah, I mean, I lost a car on one trade. It was 2 days. I lost $64,000.
Jeez.
Biggest loss. Would have been a nice Tesla.
Oh, what was it? What was the stock on?
I was trying to remember because I got asked the same question the other day in a little interview I was doing. I was in Miami.
Yeah.
It was 2 years ago. I don't remember the ticker. And it was one of those trades where, I look back on it and I learned so much from it, and realizing that, a loss is just you don't call it a loss, call it like a learn. And I was working with someone the other day, one of my students, and I was telling him, and when he was logging his trades, it's like, don't put win, loss, put win, learn, learn. Because there's so much you can learn from a loss, especially a big loss like that.
Right.
And so as a trader, I grew just from that loss, even though it sucks.
Yeah, that's a good way of looking at it.
Yeah, you have to stay positive, and obviously the emotional aspect of that. Obviously, that did shake me up a bit. But over time, you just become, numb to losing. You get used to losing money because you realize losing money is part of trading.
Right.
That's part of this job. Like, you lose money.
Yeah.
It just comes down to risk management. You know, you want to win more than you lose.
It's a numbers game at the end of the day.
It is. And it's funny because I wasn't like a numbers guy. I was never good at math in school. Realizing that you don't have to be like school smart to make money trading.
Right.
And overcomplicating things is what a lot of people do, and I simplify everything. I keep it very straightforward. And so the math behind it, yes, you need to know certain figures and numbers because it is a numbers game. It's a numbers game. There's like 3 parts of trading, okay? Risk management, trading psychology, and then the trading itself. So that edge or the charting, technical analysis, fundamental analysis, whatever it is you do to find those trades. So it's really those 3 parts that trading boils down into that you need to master.
Right. So I don't know the exact percentage statistically behind this, but why do you think a lot of people lose money on stocks?
So trading is one of the most difficult jobs like in the world. It's also one of the best jobs in the world. And I think a lot of people lose money, and that is because they either have the wrong guidance. As you know, there's a lot of fluff, a lot of BS. Don't know if you can swear on here, but there's a lot of shit on YouTube. There's a lot of gurus. I've even been called a guru. And finding that person out there in all the noise who can show the results, prove they're profitable. You want to find a mentor who's actually successful in what he's doing, and you need a way to like, for them to prove that and for you to see that. So a lot of people just go down the rabbit hole of YouTube, follow the wrong people, buy the wrong courses, what have you. And then the learning curve to trading, for some people, it could take 5 years. I think the average is probably between 2 to 3 years to really become consistently profitable.
Wow.
And most people just give up. That's it. Most people give up, or they blow up their account. They don't have any more capital. You can only blow up your account so many times and refund your account so many times before you're like, shit, I don't have any more money.
Right.
I'm going to go try something else, drop shipping, what have you.
Yeah. So what about paper trading accounts? Do you recommend people start there?
I do, and it's funny, like I used to not be a huge fan of paper trading, and the one reason is because there's no emotional aspect involved. In trading psychology, being one of those 3 parts of trading, you need to learn how to manage emotion, and so you don't have that when you're paper trading. But you can learn the basic skills and kind of go through those, like something as simple as instead of buying a call, you sell a call, or you close the position by accident, or you just learn those basic things paper trading. It's going to save you money, right? Like, you're going to lose money either way, but you're going to save yourself some money if you hop into a simulated market and trade with, paper money.
Absolutely. So with all the fluff out there, how can someone navigate these landmines and become a better trader? Is it worth buying a course and following these signal groups?
Yeah, so that's a good question. And the one thing with signal groups, and kind of my opinion on this, I was just making a YouTube video about this the other day. It's like, if you pay for, I think Benzinga has like a signals group. There's individual people who have gathered a bunch of traders together to post their trades. So say there's like 5 or 10 traders in a signals group. The problem is that even if you enter every single trader's trades, so they post their entries, they post their exits across 10 different traders trading different strategies, you enter all of their trades throughout an entire trading year, the chances that at the end of the year, those 10 traders together will actually be consistently profitable, all of their trades combined, it could be 100, 200 trades, extremely unlikely. More than likely, you will not even be able to get in on every single, alert that is, posted in that group. You get in on one alert, you miss 2, you end up you see the ratios, everything comes down to a science, especially when it comes to risk management, which I keep saying a lot because risk management is vital in becoming consistently profitable. And so there's just this huge lack in misunderstanding in how to actually trade, and it becomes this follow the herd kind of sheep, just cattle ranching. Everyone's just following this one guy or multiple people, and you miss out on learning the actual lifelong skill of trading.
Right, because you're not actually learning anything.
You're not learning anything. You're just blindly following someone. And obviously, like, what I do is I post my personal trades. I didn't do that to start an alerts group. And when starting this company, The Daily Traders, was totally on accident. I posted a couple videos on TikTok because I'm trading. It's something I enjoy. I thought some other people might find this interesting. I ended up blowing up on TikTok, and friends, family were asking me to teach them how to trade. Taught my dad, my siblings how to trade, and I just ran out of time. And I'm like, this is not, I need to focus on my own trading. I need to focus on other ventures outside of just trading because I'm very entrepreneurial. always have been. And so my mom actually was like, why don't you just create a course? And the word course, you kind of think, oh, guru.
Yeah.
Like, oh, you create a course, oh, you'll be a trading guru. So I'm like, what if I can prove to everyone that their mentor that they invest into is actually consistently profitable?
Right.
So I'm like, I'll just show my trades. I'll post my trades. I'll show my entries and my exits. And people can follow along if they, so desire. I don't have any series licenses. I'm not a financial advisor. I can just share with people what I'm doing. But then I also think it's important to learn that lifelong skill of trading. Like,
Right.
It is a skill that you could have for the rest of your life. You'll never have to work a 9 to 5 if you learn how to trade. So I did put together a course just to teach people that exact system that I use to find and execute upon these trades.
That's cool. Is trading a recession-proof skill, you think?
Yeah. It depends on how you trade. And so last year, I don't know the exact number, so I don't want to spit anything out. I trade both calls and puts, long and short. So the market's going up, I can make money. Market's going down, I can make money. That's the thing. If you know different strategies, or within my system, I have different setups where I can go long or short on a chart. So even if we're in a bear market, in a recession, I can still capitalize on that and still make money.
Wow.
And, more volatile markets obviously create more uncertainty.
Yeah.
If you get caught on the wrong side of a move, you could totally get screwed. But that volatility can also, more risk, more reward. You can make more money on that volatility if you're caught on the right side of that. But being able to play either direction and switch that bias quickly and have like systems in place where you can switch that bias and go from long to short on a chart based off of what the technicals are telling you or what my software tells me, that's just going to open up the a world of possibility where the market could be totally shit for
Right.
5 years and I could still make money.
So you became a millionaire at 19. What was that like? Because that's a lot of people's dream, and you achieved that as a teenager. Right? What was that like?
I think I hit a point where I was like, wow, I can buy almost anything I want, like not a yacht or a jet, right?
Yeah.
But, I could buy some nice supercars. I could go into a store and buy, whatever I want. And that, I had to experience that kind of, it's a maturity that comes with when you make a lot of money, you kind of just go on this craze of spending.
Right.
And walking into stores and dropping thousands of dollars on clothes. And I was in the Hamptons and I went into the store and there's this jacket. I'm like, oh, I like that jacket. I don't look at price tags. I just picked up the jacket. They ran it. Oh, $3,000. I'm like, okay. But now I'm becoming more emotionally, mature when it comes to money, where it's like, I think money, the value of money, I totally lost. I didn't have any sense of how much $1,000 was worth. That's when I became a millionaire, realizing that, well, I have so much money, the value of money means nothing. I can make money so easily and so fast. It doesn't mean anything to me.
Right.
And I feel like if I hadn't shifted kind of my mindset and realized like, oh, there is a value to money, I could have gone down that rabbit hole of, wearing all this gold. Like, I have a nice watch, but wearing all these golden chains and shit that really don't matter.
Right.
Like, this is a $20,000 watch. I always wanted a Rolex. I bought a Rolex when I hit a certain goal.
Yeah.
A certain amount of money that I made in a month. And so setting goals, however you can do it, I had like a kind of like a little Pictionary or whatever, where I had like car, watch, this. At each point I hit a goal, I'd get that thing to reward myself, to show myself and, really see and realize how far I'd come. Because you look at $1 million in your bank account, 500,000 in your trading account. It depends on what you do with that money. Some people misuse it. Some people go out and party, go to clubs, can blow 20,000 in a night at a club. And I feel like that's stupid.
Yeah, that's
and I don't ever want to become that person.
Nice.
Yeah. But if
No,
I
I love
if I didn't realize that, like, earlier on, maybe I would be there now. Maybe I'd be going
and a lot of
spending
people go
stupid.
through that when they come into some money. They just start spending crazy.
Yeah, exactly.
Mark, what's next for you, man?
Well, I think this software that I've been trading on privately for years now, I'm just almost about to launch it, which is, it's something that I've had this conversation with my advisors where we could take this software, turn it into a hedge fund, because of the profitability factor. So I'm launching it privately to some people inside my group, just like kind of beginner user access. I don't know where that's going to take me. I think I could either turn this software into a hedge fund or, a 9-figure software company.
Wow.
So I'm very excited for that.
Yeah, I can't wait to see where you go with that, man.
Yeah.
Any closing comments?
Anything, I was going to say some really cliche, like inspirational thing, but I mean, fuck, like if I could do it, anyone can do it, right?
Yeah.
It's true. It's like there's nothing holding anyone back. It doesn't matter where you come from. you can come from no money. You can learn how to trade.
You came from Maine, right?
Yeah.
That's wild.
Like middle of nowhere, right?
That's nuts. Man, Mark, it's been a pleasure. Thanks for coming on, man. Thanks for watching, guys. Digital Social Hour. I'll see you next time.
Thank you. Thanks for having me.